Hello and welcome to the Unemployed Value Degen. My name is Steve. This is not financial advice. I was asked by some of my subscribers to talk about my research process. So today I wanted to just go over how I look at companies and how I sift and sort through ideas. But before I do, every day I've been, every video, I've been looking at the situation in the market overall. And what's surprising to me, it shouldn't be that surprising, but it's surprising. This is the first full trading week of 2025, except for Thursday. We have a holiday for the passing of former President Jimmy Carter. Now, I anticipated that there would be a lot of selling in the Magnificent Seven, not because the rally is not going to continue, but because there are a lot of professional money managers that have hard limits that once a year when they rebalance, they can't have a position larger than 5% of their portfolio. And if they were 5% in Apple or Microsoft or Amazon or Nvidia last year, then in January they have to sell. So I had anticipated a lot of programmatic selling in the Magnificent Seven, maybe not to last all year, but just for January. And yet here we are on Monday of the first full trading week of the year. And what's green but the Magnificent Seven. So we'll have to see. Although, if you've been following my portfolio, you'll know that I'm very excited that this box is coming in a little bit green as well today. So there might be things happening in the energy space. But yeah, we have a rally led with the Nasdaq up 1.8% right now. This is the market's open. It's been open for about an hour. I mean, the Russell 2000 is up, and I'll take it. I'm happy for it. I'm a small cap value degen. But it's that Magnificent Seven leading everything again. So we'll see if that holds for all of January. Now, we have the 10-year Treasury, and it's being stubborn. It's been hovering right around this 4.6% range, and it refuses to go down. And I had anticipated that this spike up in December could have been tax loss harvesting. And then in January, people who tax loss harvest would have to buy in. And there's also going to be a buying in from an automatic rotation. If you're a 60-40 fund manager and you have to provide a 60-40 allocation for your clients, but when the S&P 500 goes up 22% and bonds fall 5%, then in January there's probably $1 trillion that has to take some out of the S&P 500 and put it into bonds. And the 10-year Treasury just is not falling. And I've been following this mostly because, and you've seen me draw this before, but this was the channel that I believed, this was the path that I believe we were on. And that path would have gotten us to a 3% 10-year Treasury sometime in 2026, with ups and downs inside that channel. A 3% 10-year Treasury sometime in 2026, and we're maybe not on that path. Maybe we're on a different path. Maybe it's going to look something more like this. And that's the higher for longer. We could still get to a 3.5% 10-year Treasury sometime in the first 2 years of the Trump administration. And there is a possibility that Trump could take maybe 0.5% out of mortgage spreads. So right now, the difference between a 10-year Treasury and a 30-year mortgage is about 2.5%. About 0.5% of that is from some of the regulations that were installed after 2008, after the global financial crisis. I'm not saying whether it's good or bad those things could be removed, but Trump might try to remove some of that regulatory cost on housing lending. And with a 3.5% 10-year Treasury and a 2% mortgage spread, we could see a 5.5% 30-year mortgage. I think a 5.5% 30-year mortgage is what it would take to really heat up the housing market again. And if it continues to break to the upside, if interest rates continue to increase, then a lot of that is off the table. And again, I thought that there would be a lot of bond buying in January as people have to maintain their 60-40 allocations and as people had tax loss harvested at the end of last year. But we'll see, it's not showing up on Monday. What's really interesting is even as the 10-year Treasury is up, the dollar is weakening a little bit. And that's a little bit of a surprise because normally a higher Treasury means a weaker dollar. But we had news, and the news is that Justin Trudeau is imminently going to resign. Whether that's true or not, we'll see. But so even though the interest rate is up, the dollar strength is down because the Canadian dollar is rallying on news of, you know, possibly having a more conservative government, possibly having a more pro-market government. Canada's economy has just been stagnating ever since the Trudeau administration started after the global financial crisis. So we'll have to see. And then if the dollar index does weaken, then that's going to be good for all the international positions that I've written about, mostly, although I know Brazil is not Canada. And Brazil is really waiting on that election for whether or not Lula stays in power in 2026. But it's just an interesting day in the markets where you have the Mag 7 leading, interest rates rising, and there's a lot of fear out there. Surprisingly, I mean, the market's still relatively high, but there is a lot of fear. I think people are trying to figure out what's going to be the new direction for 2025. Because sometimes the momentum sets in the beginning of the year, and it stays for the whole year. And I think market participants want to know if this is going to be a year where it's off to the races and everything's going up again, even though prices are already expensive. But we have the promise of deregulation, we have a global interest rate cutting cycle. So the market still, despite how expensive it is, there's some fear in there. And a lot of that is coming from, well, market breadth. What's interesting is the options part of it, the put-call ratio, is at greed, not quite extreme greed, but nobody's buying downside protection, nobody's buying puts. And the VIX is low. You know, the VIX is back under its moving average. And there had been some worry about the yield spreads, that there was a spike in junk bond yields, and that's coming down again. And again, for people that are worried about a recession, one of the better predictors, although it doesn't give you a very long window ahead, is when high yield credit spreads blow out. When you see a huge increase in high yield credit spreads. And that just hasn't been happening. And especially if you look back over a longer time period, this is a really, there's just no recession fear in the market. There might be fear that the stock market could fall just because it's too expensive, but there's not a lot of recession fear. Okay, but now on to the purpose for today. So when I sift through ideas, there's an argument in Benjamin Graham's security analysis that investing isn't about choosing the stocks you want to invest in. It's about choosing the stocks you don't want to invest in. You take this big long list and you try and find reasons to say no to things. And I think there is an element of that. Some people are going to disagree with this, but when I have a long list of companies to look at, I'm looking for reasons to say no. And the counter argument is, well, you're going to miss some good stuff. And that's true. I don't mind missing some good stuff as long as I don't deploy a lot of money into some bad stuff, right? Deploying a lot of money into something bad is a lot worse than missing something good. So again, that's one of the reasons why Benjamin Graham argued it's a negative act. You're trying to say no to things. Sometimes I'll use a screen. Sometimes I'll use some of these lists on Twitter. So Newcomer Investor wrote, "What is your highest conviction stock under $1 billion and why?" And that had 42,000 views and it has a lot of comments. So I'm going to take that and sift through and just take a peek at some of these names and show you my process that, and I'm not saying this is the best process. I'm still mostly an amateur myself. But the thinking is you spend 5 minutes trying to figure out if you want to spend 45 minutes. Because you can't spend 45 minutes on every name you see. There's too many stocks for that. Now there are a lot of foreign names. FinViz doesn't do a good job with international names, and maybe I'll skip the international right now. Somebody put up IDR, and again, so Idaho Strategic. The whole purpose of this is just saying, should I spend 5 minutes trying to figure out if I want to spend 45 minutes on it? Idaho Strategic, this name's come across my list a few times. Gold has been crushed, and the gold miners have been crushed since the election results and since the sell-off in value stocks, and they're starting to bounce back. So gold miners generally might be pretty good. Right, it is producing, it does have revenue. I don't like gold miners that are exploratory. Market cap is pretty small. but it has positive net income, so they're not burning through cash. So to me, that's things that I look for, is they have positive net income. I'm not totally against companies that are burning through cash in a growth phase. I just would prefer to avoid it. I don't mind that the price to earnings is small, because this is a junior gold miner. I'm sure they have some plan to ramp up production. Price to book with gold miners or any kind of miner is not always the best metric, because that's not going to capture the value of the ore in the ground, that the assets they own. Especially if they've discovered them, then you'd only have the cost of discovery in there. So that doesn't tell me a lot. Let me go to one thing I like to look at. Is I use this Macro Trends website, but companies that are too small are not in there. So let me go to, I used to use Yahoo Finance a lot. I don't like their new layout, so I'm still getting accustomed to their new layout. And you can do this in FinViz. I could go to financials, but this gives me year over year, and I would prefer quarter over quarter. But I do see growing revenue. Earnings I'm less interested in for a junior miner, as because it's also based on a prediction of, I believe the gold price is going to go up over time, so that should take care of the earnings. But the revenue is growing, so they are ramping up production. That's pretty good. I could go to the I'm still trying to figure out which system I like better, FinViz's income statement or Yahoo Finance. And Yahoo Finance, so Yahoo Finance is giving me for free a few more years here. And also Yahoo Finance does a lot better drilling down in some of the categories. So yeah, they've, since 2020, the trailing 12 months, revenue's gone up 4 times. They just flipped to profitability. And if I go back to this chart, when they flip to profitability, that's usually when there's a big ramp up in price. What's kind of amazing here is when they flip to profitability, the price didn't move. In the future, if you find a company that flips to profitability, it's a pretty good indication the stock price is going to go up eventually. So if I had, and I've seen, I think Brandon Balo talks about this company a lot. So they flipped to profitability in 2023, and the stock price didn't move. So that 2023, with a full year of positive net income on generally accepted accounting principles, is a great time to buy. And that would have been a great time to buy. And you would have, 3x your money and then got cut in half. And so it's still a 2x from here to there, which is not bad for 1 year. With this drawdown, though, it still probably is pretty interesting. I like positive net income. I like growing revenue. I'll take a quick look at the debt situation, because when I'm doing this, I'm looking for threats. I want to see, one is what's the debt situation, and it's very minimal, right? Their long-term debt, 1.3, it's $1.3 million compared to, let's see, again, assets for a miner, it's just covering plant, property, equipment. It's not carrying the mineral rights. So this this book value is not going to be a good metric for a miner. So this is going to be one that I wouldn't be able to, this is going to be one that the 5 minutes might be worth another 45 minutes, but there's not a lot I'm going to be able to tell out of here from just a quick overview. But it has a lot of the things I like. And one is it's growing, it's not heavily indebted, it flips to net income positive. Then I want to look at share counts, and share counts have been rising. They haven't been rising aggressively. Go to quarterly. So the diluted average shares, Yahoo Finance is a weird thing where the trailing 12-month doesn't give you the latest one. But the share counts are rising, so they're up to 13 million shares. 13.46 million shares outstanding. And they, let's see, in 2020 they were at 9 million and then 10 million. So they're adding about, give or take 1 million shares outstanding a year. That could be from executive compensation. It's not the worst dilution I've ever seen, but that is a red flag. And then one thing I'm going to look for before I get really excited about it, and again, I'm looking for reasons to say no, I'm not looking for reasons to say yes, is I take a look at insider buying. And I do this through this Open Insider website. There are other websites. There's plenty you can use to do that. And I do see insider buying from the CEO in the $5 range. But then I see insider selling from the CEO in the $8, the $13, the $11 range. So again, 2000, the perfect setup for this, if I had found this in 2023, when it had flipped to net income positive, the price hadn't moved, and the CEO was buying at that price, that would have been a no-brainer. I mean, I would have made that a paywalled stock on my Substack. I would say, no, you guys have to pay me for a tip this good when Idaho Strategic is at $5. After this drawdown, it's only at 10 a year later, and it's still growing. It is diluting. Let me see what the ownership stake is. So when the CEO is selling, he still owns almost 1 million shares in the company. It looks like they did a reverse split here at some point. Yeah, so to get from 30 cents to $3, it looks like they did a reverse split. He still owns almost 1 million shares of the 13 million shares outstanding, which is a pretty strong ownership stake. And he was buying in the past. So he is just psychologically aligned. He's properly incentivized. It doesn't really turn me off that there was insider selling, even, a pretty big stake of it. Founders and CEOs have to take some money off the table sometime. So that's not ideal. Again, 2023, and this thing would have been a perfect find. As it is now, it's not bad. My subscribers do like gold mining stocks, and Idaho Strategic is not terrible. It's not the perfect. This is the perfect time to find it. You find it, right at the beginning of 2024. The stock price hasn't run, but they've flipped to full net income positive for the year. That would have been the perfect time to find it. Let's see. So again, this is all about spending 5 minutes to find out if you want to spend 45 minutes, because the next step is listening to earnings calls, looking at the corporate presentations, if they have a lot of debt maturities, pulling out the 10K, and looking at when different bond issuances mature. Okay, ACIC, American Coastal Insurance. I'm somewhat hesitant. So insurance is a big competence gap for me. Property and casualty insurance, they're insurance specialists that this is all they do. And it's tough to know with in the insurance business. It's not an easy business, and it's also very much outside of my competency. I like easy businesses to understand. I mean, I could spend a lot of time researching insurance to try and get it within my competency. And I even did write about 2 insurance companies. Maybe that was in error, because it's really tough in a niche industry that's not in your competency. And especially where you have, you have to see what exposure they have to Florida for hurricanes. You have to know a lot. But this is a popular one right now. A lot of people like it. And in the last 2 years, it's gone from, what is this? It's 12x just in the last 2 years. So they must be doing something right. But I really have very little way of knowing if this is just the beginning or if it's coming to the end. Price to sales of 2. Price to earnings of 6. I mean, I could compare it with some similar sized insurance companies and see if, see if that price to sales is meaningful. Now, some of these, you don't want to compare a small cap with a large cap, but just for example, so Allstate, price to sales of 0.8. Looks like all insurance had a good year. I know there was a big insurance rally during 2024. Again, this is probably going to go into the too hard bucket. One, because of my competence, I'm going to have to spend some time getting some comparables on it, trying to find out if it's compared to other similar sized insurance companies, if it's more or less expensive, if it has a better or worse book of business. It is profitable, and let's see. And I'd have to probably ask ChatGPT or Gemini what happened to this company in 2021, that they probably had a spin-off. They probably sold some part of themselves or closed down some part of the business. Revenue just in the last 3 years has been not growing aggressively, but it has been growing. And yeah, earnings. It looks like they're bouncing back from a hard loss in 2022. Anyway, for the 5 minutes to find out if I want to spend 45 minutes on it, this is going to go in the too hard bucket for me. And I might be throwing away a real gem here, but that's what you have to do to go through a long list of things, finding opportunities. Let's see. LXU is another one that somebody submitted. LSB Industries. So I've been looking for chemical stocks. This is interesting. One of the first things I look at is just what kind of business is it? What do you do? LSB, let's see. Do they tell me what kind of chemicals they make? Industrial, agricultural, they might make some kind of fertilizer. High purity metallurgical grade ammonia, nitric acid. So then the agriculture, yeah, this is a fertilizer company, right? So ammonia fertilizer. I like this because I don't even know how they're doing yet, but I've been looking for exposure to agriculture, and I had symbol UAN, might even be here as a competitor. Nope. So UAN is there's things I don't like about UAN, which is it's a limited partnership, and this is the fertilizer company I've written about on my Substack. It's a limited partnership, and Carl Icahn is accumulating shares, and if he gets a certain percentage, he can just buy the rest out, as the rules are on the limited partnership. He's done that to several other companies, and the minority shareholders get badly abused. So I'm kind of looking for an excuse to replace CVR partners. Now, this stock price is miserable, but agriculture's had a rough couple of years. Their net income negative, which I don't like. Price to sales of 1, which for a lot of materials companies isn't even that cheap. Price to book of 1. So I'm going to have to dig into this. I don't like this new Yahoo Finance layout, but their financial statements, sorry, not LSB, LXU. How confusing. The symbol is LXU to get to something called LSB Industries. I'm going to make a mistake there. Hopefully not a mistake while I'm trading. Okay, so we have, and is this company big enough to be on macro trends? Let's see, macro trends. I should probably make a shortcut for that one. LXU. Okay. So this one, if the company is big enough to be on macro trends, I do like this better than Yahoo Finance for a lot of things now. And it defaults to the revenue. So yeah, the agriculture is a cyclical business. This is when, after the invasion of Ukraine, fertilizer prices were high. It's been a bad couple of years for agriculture, so fertilizer prices are low. This makes sense for an agricultural company. It's a company that's been around a while. It has a past. It's gone through periods of good times and bad times. Let me look at, so that's the revenue. Let's take a quick peek at gross profit. So it's how bad are the losses right now? Net income. So yeah, they're just barely net income negative trailing 12 months. If this is the worst part of the cycle, it's not like they're hemorrhaging cash in a big way. It's not terrible. So I'm going to have to look into management and try and figure out, was there a management change? Did something structural change? I mean, they went through years and years and years of losses. I'm going to want to answer the question when I look into the company more. Did they do something structural that's going to prevent this outcome again? Because I don't want to own a stock for 5 years of negative net income. Although sometimes there's, because of depreciation, you could still have, positive EBITDA for most of it. And a lot of companies, if they just paid me out depreciation as dividends, I'd be happy if you buy it cheap enough, but not at over 1 times book. I mean, you have to have a company cheaper than 1 times book for that. So it's interesting. It's not terrible. Check for dilution. And so they engage in some sort of corporate action that increase shares, but they are engaging in share buybacks over time. So I'd want to find out what it was that made them increase shares. It was probably something of an acquisition or restructuring. And in the meantime, they are willing to do share buyback. So again, what happened in 2021 is going to be, it's also when revenue kicks up. Yeah, so probably it was an acquisition in 2021. Maybe they found some synergies. Again, I'd want to know the answer to that. And then with that big dilution, so stock price is a wild ride. But let me look at market cap. Also a pretty big wild ride. So in the interest rate cutting, in the COVID boom, right, when interest rates were zero and prices went to the moon, this thing was 4 times as expensive. I don't think we're going to have a crazy mania like that for every small cap just go to the moon. So as far as what's the upside potential, it probably would take a long time of good performance for the business to get back anything close to this. But yeah, this opportunity could be a 2 or a 3 bagger over a reasonable time frame. One reason why there's just this huge divergence between the stock price and market cap, again, was this this dilution, this shares outstanding. So the high prices the stock had was when its float was significantly smaller. So yeah, I don't hate it. It's not terrible. I will add this to the list because I've been looking for a chemicals company, and I've been looking for agricultural exposure. I like independent cycles. It has a small negative net income, but it could still have, let me just go to the cash flow, see if the depreciation is enough in recent time. Right, so you have that negative net income, but the cash flow is still a good chunk negative. Investing activities in the last quarter. So yeah, I'm going to want to dig into a change in investments. Sometimes this is a write down. They just remove some goodwill from the balance sheet. Sometimes this is a real cash loss. I always want to check and see if it's a cash loss or a non-cash loss. Let's see. They haven't been paying dividends. Stock-based compensation, not egregious. Yeah. Still trying to decide which one I like better. The new Yahoo Finance or Macro Trends if I have access to it. Quarterly, yeah, so this was the negative cash flow. It was 30 million in capex, but it's, you know, minus 187 million in investing. And that was, looks like a purchase. Looks like they acquired something last quarter. That could be very interesting. So I'm really gonna, as far as spending 5 minutes to find out if I want to spend 45 minutes. This is a company that was struggling, engaged in a highly dilutive stock-based acquisition, but that appears to have improved their cost structure and got them out of losses. And last quarter they did another acquisition. So this is moving to the pretty top of my list for something that I want to look at. So this is very interesting because it's still cheap. And then I go to the balance sheet, check out the debt profile, so assets versus liabilities. Before I pull the trigger on this one, I'm going to want to look at their 10K and see what the maturities of those liabilities are. Is it not giving me quarterly balance sheet? Come on, Yahoo. Okay, Yahoo's struggling. Let me look at the assets and see how much. Okay, now that I like. They have very little goodwill and intangibles on the balance sheet. So unlike a miner, this property, plant, and equipment is probably pretty firm. Yeah, this one is definitely going on the list to watch. I think it's interesting. I've been looking for chemicals. I've been looking for agriculture. All right, now what's next? Let's see. GMRE. What is GMRE? And again, this is coming from Newcomer Investors tweet about what's your best company under $1 billion market cap. Now this is a real estate investment trust for healthcare facilities. And you guys probably know that I've been a big enthusiast for medical properties trust for a while. This one, the price to book is over 1. Price to sales is low. Net income negative. Now, for a REIT, you're going to have to go not look at negative income, but look at funds from operations. Take a look at their revenues. Is the rent that they're receiving growing? And it is. Let me see. GMRE. Does this have... Is macro trends have GMRE? If it's small, sometimes you don't get it. Okay, so revenue is increasing. One thing to watch out for in real estate investment trusts is a lot of times they'll fund their growth through share issuance. So yeah, so as they've been acquiring more hospitals, they issue shares to pay for that. In that kind of world, I want to look at price to book ratio. And so book value per share has been falling pretty steadily as they issue shares to do acquisitions. Not great. Net earnings per share, maybe that's not the best way to look at it. Revenue per share, though. So again, this stock issuance to fund acquisitions, if they're not great acquisitions, you even have revenue per share down. So this one I'm going to throw in the trash. This one is the spending 5 minutes to say no. Global medical REIT, that's going to be a hard no for me. AQST, Aquestive Therapeutics. Yeah, if insurance is a competency problem, then pharmaceuticals is a competency problem. I know there's some people that are really excited about. There's a bunch of patented drugs that are becoming generics, and there's going to be open competition for that. That is interesting. This is probably going to get put in my too hard bucket. If I have a lot of free time, I might read somebody else's write-up about them. I might listen to an earnings call. I might look at an investor presentation. But this one is hitting my competency list limit pretty hard. I'm going to write it down just because I've seen pharmaceutical companies with this transition from patents to generics. It's been coming across my list for a long time. And if people are really enthusiastic about it, if it's their #1 pick, it's probably worth a little bit of a look. I'll take a peek. Licensed commercial medicines. So looks like they do have some patented drug and some generic drugs. Let's see. So they have a film-based delivery. Oh, I know what these guys are. These guys are the competitor. So I have, yeah, that slipped my mind for a moment. So I am invested in their competitor. As much as I just said that I have a hard competency problem with drug manufacturers. But this one, somebody explained to me what was happening with this one, and I did the work and overcame my competency problem. So both of these companies, Ars Pharmaceuticals and Aquestive Therapeutics, are trying to replace EpiPens. So they're trying to do an epinephrine delivery system. Aquestive Therapeutics has a film you put in your mouth and it dissolves, and Ars Pharmaceuticals has a nasal spray. And I've sided on the side of this one with the nasal spray. For one thing, they have a head start. For another thing, they competed against the mouth film for the opioid overdose drug Narcan, and they took 95% market share. I think everybody who's following these two companies, everybody agrees EpiPens are going the way of the dinosaur. EpiPens are going to fade away to nothing. That the market share is going to be taken by one of these two companies. I just think Ars Pharmaceuticals is going to take more market share. Their head start, they're expanding internationally, and they already beat the mouth film once for opioid overdoses. The counter argument to that is the consumer isn't choosing that drug. You know, the paramedic in the ambulance is administering it. So on a drug that somebody chooses to take, they might prefer to put a film in their mouth than to squirt something up their nose. But there's still going to be a lot of purchases done by airlines and ambulances and clinics and things like that. And I believe the delivery mechanism will be faster and more efficient. So Ars Pharmaceuticals, their patent is for a drug that they mix with their nasal spray to to facilitate drugs getting across the nasal membrane faster. Don't tell the Colombian drug cartels that that exists. If they're mixing that with cocaine, that would be wild. But anyway, yeah, so AQST. Now, this is a funny situation where the purpose of diversification is for when you don't know the outcome. I think the clear outcome, the easy prediction, is EpiPen is going to lose. And then if you were kind of unknown about who would win, Aquestive or Ars Pharmaceuticals, I wouldn't fault anyone for going 50-50, because whichever one wins is going to be a multi-bagger. It's going to more than offset the losses. And if Aquestive has other products, you know, if they're going to be treating other drugs for this, it's not like this company's a zero if Ars Pharmaceutical takes more market share. So yeah, this is a situation I wouldn't be against going like 50-50 if I wasn't so confident that the nasal spray was going to win over the mouth film. So we'll have to see. Let's see, there's a lot of Canadian names on this list. AUNA. Healthcare. So this is a recent IPO. There's not a lot of data. And like a lot of IPOs, it's gone straight down since IPO. What are they doing? So 210 million market cap. Net income negative, but they do have revenue at least. $1 billion in sales. I do get interested when something has a price to sales of about 0.2. Because I think any well-run company can get back to a price to sales of 1 if they're headquartered in Luxembourg. Medical care facilities. What does this company do? That's one of the first questions I usually ask is, what does the company do? Because it is a trap to think of a company as a ticker that goes up or goes down. So leading the healthcare transformation in Latin America. So now that's interesting. I like Latin America. So they have 3 hospitals in Mexico. So yeah, this looks, it's probably not a REIT because it's not, I mean, it's on the US stock exchange, but it's not US domiciled, so I don't think they get the tax benefits of being a REIT. So this is hospital ownership, 700 beds in Mexico, 1,000 beds in Colombia, 484 beds in Peru. Okay, so this is a pretty small hospital operator, at least compared to Medical Properties Trust, which I'm already in. This is interesting because Latin America is cheap right now, so I'm going to add this to the list. There's not a lot to see, mostly because the IPO is so recent. Excuse me. So with the IPO being so recent, there's not a lot of information there. You can see past revenues. Nope, no past revenues. AUNA. So this, I'm gonna have to go to the company and look at some of their presentations. As far as spending 5 minutes, though, if I want to spend more time, I could look at this one a little closer. Again, they just had their IPO in March of this year. What kind of financials have they provided to the system? So you do have growing revenue, and this is going to be hopefully in dollars. Even sometimes when it says in dollars, it's not. They're still losing money on an earnings per share basis. And then what is their... But their share count isn't changing. So it's much more common in Latin America to have the share count stay flat, not to have this problem with executive compensation, not to have this problem with dilution. So I like that. I like that the share count is flat. Are insiders buying? AUNA. Sometimes the foreign stocks don't have any information for insider buying. Let me see. So EBITDA is growing pretty aggressively. Check out their balance sheet. That is a lot of assets and a lot of debt for a $200 million market cap company. Shareholders' equity has been growing. Will I get a quarterly on this one? Yeah, so shareholders' equity, it did have a rough patch recently. So they might have tried to deleverage a bit recently. They might be over their skis. looks like a company that might have some problems. Let me check out the cash flow. So this is one where, let's see. This common stock issuance is probably from the IPO in March. Their interest expense, go back to annual. Their interest expense is going up pretty aggressively. Let's see. This is going to require a little more digging. So as far as 5 minutes to find out if I want to spend 45 minutes, this one's going to be a yes. This is Latin American hospitals. It's not diluting. It's domiciled in Luxembourg, which is a country with rule of law. It is net income negative. It does have some interest expense problems. But you do have shareholder equity over time. It was on a good growth path. With the rising interest rates, so a lot of companies found themselves after interest rates rose that they had to delever. And so I think this is a situation where this company has to delever. They were at a little bit over their skis on leverage. They have to find some assets to sell. Might be a little bit struggling, so it's worth digging into. Let me go back to this one. Yeah, price to tangible book is about half. Not as cheap as Medical Properties Trust, but probably suffering from exactly the same problems because they're, leveraged hospitals in a rising interest rate environment. So yeah, that's an interesting one to me. Talkspace. So I've done a write-up on Talkspace. It has a lot of enthusiasm, and the price has really rallied. I won't look at this much because I've already done a write-up on them. I think I might prefer Teladoc over Talkspace. That might be heresy to people that are so enthusiastic. HDSN, Hudson Technologies. What is this? Specialty chemicals again. So I've been meaning to get into the chemical space. What kind of chemicals do these guys do? Let's see. Refrigerants. Okay. Yeah. So for those of you guys who aren't familiar with refrigerants, back when we had the hole in the ozone crisis, environmental crisis, refrigerants were identified as one of the chemicals that was just damaging the ozone the most. Along with hairspray and things like that. So it's highly regulated, and the price on refrigerants is they kind of put a cap on it. So if you need your air conditioning system refilled, it's expensive. I don't know how much of those profits actually go to the companies that are using it, or if the prices are just high because of that government control. But this is interesting. I think I've seen people talking about this before. Now, the price has come way down all year. I mean, that's just a brutal price compression all year. They are, they're net income positive, right? So they're not even losing money. They're trading about one-time sales, which when I find a struggling company is about what I think the price will get back to. But industrial companies tend to fetch higher multiples anyway. Let me look and see. So HDSN, is this on macro trends? Yeah. Okay, so yeah, this company is growing, and then just cyclically, it's had a rough couple of years, which a lot of companies have had a rough couple of years with the rising interest rate environment. Look at that seasonality. Okay, so growing, but with a rough couple of years. How is net income? So yeah, net income's positive recently. They were also having a hard time. I mean, they were losing money well before COVID. So I can't blame COVID for this. I don't know why they were losing money. When I dig in and do my research, I'm probably going to want to find out why the company was doing so poorly then, because without answering that question, I don't know, hey, could this happen in the future? Shares outstanding are only growing. So not only are they not doing share buybacks, but they are a serial issuer. I mean, they haven't been since 2021. So this was probably when they were losing money. Go back to net income. Yeah, so they were issuing shares all through this time, probably to pay the bills. So yeah, I would have to look at management. Has there been management changes? How did they get out of this problem time? And are they in a new era where they are going to stay profitable and not issue shares? If that's structural, did they acquire something that lowered their cost structure? Do they have better management now? There's some unanswered questions, but this could definitely go on the list. And then, yeah, this is just this year that's been cut in half. That's not really helpful though. What's the upside case even if you're right? So price to sales is about 1. Over its history, before this period where it was losing money aggressively, it was trading, yeah, it could get back to a price to sales of 2. So this thing it's interesting, but it's not even really that cheap. That's a that's a lot of work for a potential double. It's still a potential double, and I have been looking at chemicals. And when I dig into it, there might be other things going on. Maybe they have new facilities opening. Maybe there's other sources of revenue or growth. Maybe the management team is really good. But that's a lot of work for a double when some companies that are small have a lot more torque. No big insider buying, just one director. No big insider selling either. Yeah, 4 years and there's only one inside purchase, so the incentives are not aligned for the management team. Oh, no, I take that back. $72,000 purchase from the CEO, Brian Coleman. That's not enough insider buying to get me turn off the option exercise. That's not enough insider buying to get me really super excited about the incentive alignment. It's really just kind of a token gesture. This is 2001, which is right when their problems were changing. So this could have been a new CEO. Sometimes when a company hires a new CEO as their first act, they'll make kind of a good faith purchase. I don't know if that's what happened here. Yeah, I'll add Hudson to the list. HDSN, that's the refrigerants. Yeah, not amazing, but not bad. That 5 minutes, it's worth 45 minutes to look at. All right. SWBI. Smith & Wesson, is that the gun manufacturer? It is. And its market cap is under $1 billion. And for all of 2024, the price has been cut in half. That was kind of an unsustainable peak with the low interest rates from COVID. That money printing, while Jerome Powell was up for renomination, was really destructive to the markets. I don't know if you know the background for that, but the Fed chair was up for reconfirmation. And a lot of people speculate that interest rates were held too low too long and really juiced the market much too high just so he could try and keep his job. And that's very unfortunate. So that peak probably is not sustainable, but it could probably get back to prior multiples. With the Republican Congress, the whole pressure that's put on gun manufacturers is probably going away. Although there's still lawsuits, like the state of California is suing these people because the guns are used in California, which is it's not how product liability is supposed to work. But these ideologues don't really care. They're net income positive, but as far as their net income goes, they're not cheap. Price to sales is close to 1. Price to book is slightly over 1. I mean, yeah, this thing could probably double. But if it takes a long time to play out its thesis, and there's a Democratic Congress or a Democratic president in 4 years, they could have some real political risk. So yeah, it's interesting. It doesn't have red flags. It's not a no. Let me see if there's insider buying. Are insiders saying that things are changing in the company and we should probably want to get on board? No, insiders are only selling, which is common, right? It's rare to find insider buying, but I still want to look for it. Yeah, not too wild or crazy. Look at just real quick. I was listening to Sportsman's Warehouse, who said that there was a big spike in buying. When was it? I don't know if the timing matches up to when was the October 7th massacre in Israel. The Sportsman's Warehouse said they had a huge spike in buying after that October 7th massacre in Israel. I don't know why Smith & Wesson's revenue was so much higher in 2021, and this is the COVID era. Maybe I don't know if there was particular lawlessness during COVID, but this is a strange revenue pattern. I don't know what was really driving their revenue. And then net income, yeah, they only had a tiny bit of losses in 2020, probably with the COVID lockdowns. But yeah, this is not a high risk company. This also doesn't have a lot of upside potential. But they have been buying back shares, so that is a really nice share count chart. They've gone from 67 million shares down to 45 million shares over the course of 12 years. So they do engage in share buybacks. Yeah. So yeah, the market cap is down here at $500 million. And it can get, if you hit it for the peak of its next cycle, you could maybe turn Smith & Wesson into a 3-bagger, but it's much more likely to be a 2-bagger. Again, unless something was happening under the surface, which I don't know if it is, because, a company like this, they could get a big Department of Defense contract, something like that. I don't mind adding it to the list, but it's a lot of political risk for a potential 2-bagger. All right, but it was somebody's number one strongest pick. Let's see, ADUR, Aduro Clean Technologies, Pollution and Treatment Controls. A recent IPO. This one, or it's not that recent. Hold on, we'll go back. So this one has been on the way up. So that's a nice. I'm not much into technicals. I'm more of a value investor. But that is a nice upward trend. It's had it's doubled in 2024. Still not net income positive. Market cap 181 million. Not a lot of sales. So this probably is in the technology stage, right? They're probably still developing their technology. They're only just starting to get some contracts. Yeah. Works with water to make big molecules smaller and more useful. Hydrochemolytic. So it looks like they have some way of breaking down hydrocarbons. So they can take some of those tar sands in Canada and make them to a lighter grade of oil. They can make base chemicals from plastics, or turn it into biofuels, something like that. This is probably going to be too early stage for me, because you're kind of making a bet on the technology, and yeah. So the market likes it, right? The market really likes this thing. I'm not a huge fan of getting into companies that are really that early on in their process. I mean, Let me see. If management is buying in heavily, I could be persuaded if I listen to enough earnings calls and I do enough research. There's no insider behavior that maybe sometimes it doesn't show up on this. I think I'm going to pass on this one for now. It's just not my cup of tea. It's kind of too early in their company's life. ROOF. Beacon Roofing Supply. Industrial distribution. $6.5 billion market cap. Trading below one-time sales. They were asked for companies below $1 billion market cap, but they didn't listen to that. It's not cheap by price to earnings. It is cheap by price to sales. It's not cheap by price to book. $6.5 billion market cap company. It didn't crash much in the value sell-off. It's only about 10% down or so. But it has been doing very well since the start of 2023. So a double in 2 years since 2023. That is a very good performer. Let me see how their revenues are doing. Is the company growing or did it just get re-rated? Okay, so that's not working. That's Beacon Roof Supply. What's the symbol roof? No, the symbol roof. These might be ETFs or something foreign. Yeah, so they had, this was not the company they had meant to do. It's not a bad little industrial, but it's not particularly cheap for me. It does have growth though. So revenue has about doubled in 5 years. Not terrible. Before that it doubled in 4. So it's not a bad little growth story. Not against it. ASP Isotopes. So this is something somebody recommended. I have done a write-up on my Substack for this one. Let's see. Poet. What the heck is Poet? Poet Technologies. Semiconductors in Canada. This is going to be another limit to competency. And they have a pretty big market cap for not having any sales. So again, it's going to be an early stage technology company. Poet powers AI, so they're really trying to get in on the AI train. An optical interposer, whatever an optical interposer is. What the heck is an optical interposer? Okay, so to be able to connect fiber optic cable with computer chips, right? So this is the interface between fiber optic cable and computer chips, except that they have not been selling very much of it, right? Sales of $120,000 on a $450 million market cap company, which has doubled, or it's gone up 6 times in 2024 on the artificial intelligence build out promise. That's going to be a little too hot for me to handle. That's not what I'm looking for as a value degen. I mean, the price could still keep going up, but it's not real value. So the guy who's been recommending these ones, he's into some niche materials, New Era Helium. I haven't looked into the whole helium thesis yet. And this, all right, a pre-revenue company, 50 million market cap is not my cup of tea. I try to stay a little bit bigger. Atomera, semiconductor equipment and materials. Wow, there's another just 8 or 9 bagger. It's trading at 660,000 in sales for a 630 million market cap company. It's trading at 963 times sales. Maybe they have some new big contracts coming. So I would have to dig into that, but to me this is maybe too hot to handle. Wow. I don't know when this particular person on Twitter bought into this. Hopefully did quite well. Gambling stocks I don't really get much into. XFAB. Let's see. KRI. What's KRI? Nope. Some of these are foreign and don't show up on FinViz. This is, oh, High Tides. This is a cannabis stock. So cannabis has already doubled. So High Tide has already doubled this year for Canadian cannabis stocks. But this company does have revenue. They don't have net income, but they have revenue. I am not so eager to jump into cannabis stocks. I think the crop just grows too easily. I mean, I might, if I have nothing better to do, I might try and dig in and try and expand my competency there, but I'm not super enthusiastic about it. Oh, somebody's recommending a stock that I already wrote about, which is Gravity. This is I believe it's a South Korean computer game manufacturer. And there's an activist investor trying to get them to return capital to shareholders, and that caused the stock price to bump up, and it crashed right back down. They've got a huge amount of cash on their balance sheet. It's just outrageous amount of cash. And the, you know, this is running into the problem of the Japan and South Korea companies. They have so much cash on the balance sheet. They are growing, but they're just not growing fast enough to get anybody super excited about it. But it's gaming, not gambling, but computer gaming. There's a write-up on my Substack about it. BTBT Bit Digital. This one's a 4x in the last 2 years. Hugely volatile. Capital markets. What the heck does this company do? 700 million market cap. They have revenue. They're slightly net income negative. They're projecting to be net income positive next year. High performance computing solutions. High performance computing, Bitcoin mining, Ethereum staking. Okay, so this is something in the crypto space. They've built a data center on a hydroelectric energy space. I know that's common in Canada. So it looks like they're some kind of a, yeah, it looks like it's a Bitcoin miner. I have the Bitcoin company that I like, BTBT. I have the Bitcoin company that I like, which is WELX, and I have a write-up on it. This one I'll add it to the list. I'm not so much of a baby boomer that I can't get interested into a Bitcoin miner. Somebody says it's their highest conviction thing. Even with the price of Bitcoin going up to almost to 100,000, they're still not net income positive. But I'm interested. I'll give it a look and see what they're doing that's different. Let's see. MVST. Microvast Holdings, electrical equipment and parts. So this had it's 10x since the November election. What are these people doing? It's hemorrhaging cash, right? It's lost a huge chunk of its market cap. Okay, what do you make? Lithium ion battery for transportation heavy equipment. So this must be on Elon Musk's affiliation with Trump and Trump winning the election, or people saying Elon Musk winning the elections. This is a battery company. I mean, it could be to be losing that much money that fast. MVST. How fast are they losing money? Revenue is growing. That's not bad. Gross profit. EBITDA. So the losses were shrinking, but the last 2 quarters kind of give you confidence that, hold on, that's a trailing 12 month. The first quarter of being net income positive. Well, I'll be darned. So the reason why the stock 10x'd is right there. The first quarter of being net income positive. Oh, that's coming after a quarter where they had a huge loss. Yeah, and then shares outstanding. That doesn't surprise me because they're a tech startup, so they're diluting to survive. So again, this is battery technology with its first quarter net income positive, which caused the stock price to 10x, which has gotten it now to 2 times price to sales, which is already getting expensive. And in the last 12 months, they're still losing a lot of money. They might have some killer contract. They might have a huge demand coming. This is, they're diluting. Let's see, MVST. So the CFO and the chief financial officer and the chief operating officer did buy in, and they bought in, you know, with a pretty good chunk of cash from the outside. I mean, dropping $750,000 on the company's stock is a pretty strong statement. And the CFO has all the financials to know where the bodies are buried. The chief operating officer, those are 2 impressive insider buys that took place in 2022. So this is getting interesting to me now. You know, I'm not particularly crazy about batteries, but I am interested in a company that has flipped to net income positive, has huge insider buying from the CFO. Now, I didn't find it before the stock price 10x'd, but it's in a trendy area where the multiples could get much higher. So this is a $770 million company. It was in the 2021 zero interest rate environment. It was a $3 billion company. This is not a no, right? I don't have any exposure to batteries. But for a tech company to have that kind of insider buying from a CFO, and for them to have just flipped to net income positive, I could spend some time looking at this one. MVST. That's going to be lithium batteries. You kick yourself because you missed out on the 10x, but I mean, what kind of reasonable person would buy a stock? I mean, the insider buying is there, but when they're just hemorrhaging cash in a melting ice cube, and I'd want to listen to management and try and have some sort of prediction about, is this net income positive quarter, is that going to keep on going, or is that a fluke? Sometimes just the way working capital lands or something like that. And I think the price could fall from here because that was a huge run up, and it was only on one little data point. But I don't know. So let's see. Out of all the names I looked at, there was Idaho Strategic, LSB Pharmaceuticals, symbol LXU, AUNA Latin American Hospitals, Hudson Refrigerants, Smith & Wesson, probably not so excited about that one, BTBT, the Bitcoin miner, and MVST lithium batteries. Yeah, I mean, that's my process of how I spend 5 minutes trying to figure out, making a short list, trying to figure out if I want to spend an hour or two digging deeper into things. It involves a lot of saying no, right? It involves a lot of looking at companies and just saying no right off the bat. I avoid cannabis stocks. I avoid gambling stocks mostly. I avoid insurance companies. I avoid everything outside of my circle of competence. And maybe I try to expand my circle of competence over time, but doing what I can. Yeah, it's a process, and that's how I screen, how I filter things. Sometimes I'll do it through a screener. Sometimes I'll do it through people's strong conviction ideas that I see on social media. But I'm looking for reasons to say no. Anyway, thank you for watching. This is the Unemployed Value Degen. It is not giving financial advice, and I hope you guys have a great day.